And this is like one of those things where when you're an investor, you just see this happen and you just want to throw up your hands and give up. You're like, what? How am I supposed to account for the wind? Hey everybody, Walrus here from Walrus Street, bringing you your news and earnings for the week of March 29th. 2021. Just a reminder, I am not a financial professional. All information in this video is for entertainment purposes only. Well, we had another shit start to the week. Thankfully, on Friday, everything sort of bounced back a little bit, and as of the recording of this video, the futures are a bit positive going into next week. So, fingers crossed, maybe we're finally getting out of this kangaroo market phase and back into a bull market. That'd be really, really great. Yeah, I just want to see some green in my portfolio. I'm like an addict, and man, I gotta get my fix. I gotta get some of that green, guys. Okay. Anyway, let's get into the news. I did make some pretty big changes to my TA list this week. I put a couple of notes at the top of the list for some commonly asked questions. I did put BDSI onto the list, which is the stock that I covered in my DD video last week. First news story, ARKX is finally here. So this is from the SEC.gov website. This is the official Form N1A from ARK ETF Trust. On March 29th, 2021, we are finally getting our ARKX, our ARK Space Exploration and Innovation ETF. We won't know until aftermarket on Monday what exactly goes into this ETF. If you are subscribed for ARK updates, then you will get the email at the end of the trading day on Monday that'll show you all the buys that were made for that ETF. Previous ARK ETFs have premiered around $20 a share. ARK has been really heavily beaten down over the last couple of months. I'm not expecting this to rocket really high. It is probably going to be gaining on day one. Some of the companies that you would expect to go into it would be like Virgin Galactic, Boeing, Lockheed Martin, some of the 3D printing companies, VacQ, which is a SPAC merger coming up with Rocket Labs USA. I'm assuming that SPAC is going to go into this as well. Everything else is just guesswork. Your guess is as good as mine. We do know that ARK traditionally does not mind having the same holdings in multiple ETFs, so you can look through the other ETFs to get some ideas what is going to go into this one. Now, I haven't said too many positive things on this channel about Intel. I have talked about Nvidia and AMD in a very nice light, but here is finally some good news for Intel. Last Tuesday, Intel announced that it's going to spend $20 billion on two major factories in Arizona. The reason this is big news right now, we've been dealing with a semiconductor shortage. Part of that is the actual bottlenecks on manufacturing. Part of that is a raw material with a silica shortage. While these factories aren't going to be up to speed to make anything for a couple of years, this is still really great news for Intel, knowing that they're going to be able to help alleviate future semiconductor shortages from a US-based manufacturing plant. These were the first remarks from the new CEO, Pat Gelsinger, in public. He said Intel is and will remain a leading developer of process technology, a major manufacturer of semiconductors, and a leading provider of silicon globally. Also, Intel said it's going to act as a foundry or a manufacturing partner for other chip companies that focus on semiconductor design but need a company to actually make the chips. Its foundry division will be called Intel Foundry Services. This foundry business will compete in a market potentially worth $100 billion by 2025 and will manufacture a range of chips. Companies including Amazon, Google, Microsoft, and Qualcomm could be customers for the business. And Microsoft CEO Satya Nadella appeared at Gelsinger's talk in a show of support for Intel's move. This foundry idea is huge because it's going to open up Intel to a wider range of customers and services. A lot of US chip designers end up sending their chips out to TSMC, Taiwan Semiconductors, for their chips to be manufactured. So this is going to allow chip designers to manufacture the chips right within America, which is going to save a lot of import-export taxes, tariffs, that sort of thing. Always going to be much more convenient. The fact that the Microsoft CEO, Satya Nadella, came out in favor of this is a huge vote of confidence. When you've got the CEO of a $1 trillion plus market cap company in support for your announcement of the foundry, you can imagine there's going to be some exclusive contracts coming up with Microsoft for this. Let's move on to some Microsoft news. Nice transition there. Microsoft closes $7.5 billion Bethesda acquisition, aiming to take on Sony with exclusive games. Microsoft's gaming console is the Xbox, Sony's gaming console is the PlayStation. Microsoft confirmed that some new Bethesda games are going to be exclusive to Xbox consoles and PCs. Historically, Historically, the firm's been lagging behind Sony when it comes to major first-party releases. Microsoft closed its blockbuster acquisition of ZeniMax, the parent company of Bethesda. This was announced back in September, but the deal is finally closed. Bethesda is a household name in gaming. It's published a number of hit franchises, including the RPG Fallout, Elder Scrolls, and the Doom shooter franchise. I wonder what this is going to mean for the Skyrim modding community. Is it going to be time for some Master Chief mods on dragons? This one is a bit of a rumor for Microsoft. Discord is reportedly exploring a $10 billion plus sale. There's rumors right now. Bloomberg is even reporting that Microsoft is in the running for a deal to acquire Discord. Discord's a popular app used by gamers. It offers incredibly low latency chatting, and it has a really low impact on your system while it's running, so it doesn't interfere with any of the computing power needed for the game itself. A lot of people aren't very happy about this because they think Microsoft is going to destroy Discord like it destroyed Skype. But you have to remember, the Microsoft leadership now is different than the leadership when it did acquire Skype years ago. So I'm optimistic that this would be a good thing for Microsoft and for Discord, since Discord is seeking the sale. And as a Microsoft stockholder, I know this would increase the value of the company in the long run. Bully for that. It's important to note that Microsoft is not dealing with any antitrust investigations right now, like some of its peers at Google and Facebook are. However, with the closing of the acquisition of ZeniMax and a possible acquisition of Discord, Microsoft could soon be getting into that area where they're going to be investigated for violation of antitrust laws. So this is kind of like a line that the company does have to tiptoe pretty carefully. Finally, some good news coming out of the government. US weekly jobless claims drops to one-year low in boost to economy. This was a big contributing factor to the market gains at the end of the week. The report from the Department of Labor on Thursday showed the initial claims down to 684,000. If you remember, previous week it was up to 770,000, so we're down almost 100,000 from that for initial claims filed. And that initial claims filed is kind of the metric that the media has been reporting to show the state of the economic recovery. Obviously, we're a long way from where we need to be, and that's still a shit ton of people without a job, but improvement is good. The stock market likes that. I gotta talk about the biggest news story of the week, the goofiest news story of the week, the Suez Canal blockage. For those in my audience who don't know where the Suez Canal is, it's not here. This is the Panama Canal. The Panama Canal is the one that connects the Atlantic to the Pacific Oceans via the Caribbean. Fun geographic fact about the Panama Canal: even though it is an east to west journey, those ships in the canal itself are moving from west to east. Wow, geography. And now you know. The Atlantic side of the canal is actually further west than the Pacific side of the Panama Canal, but that's not important because that's not what we're talking about. We're talking about the Suez Canal over here, connecting the Indian Ocean to the Mediterranean Sea and then the Atlantic Ocean. This little strip of water right here is the Suez Canal, and we got a big old boat stuck in the way. The shipping company is called Evergreen, and the ship itself is called the Ever Given. Ever Given? More like ever taken global trade away. Please don't leave. I promise no more puns like that. Suez Canal blockage could intensify shipping delays, lead to shortages of toilet paper, coffee, and other consumer goods. What? Toilet paper? Suzano, a Brazilian company that accounts for about 1/3 of the global supplies of hardwood pulp, which is used to make toilet paper, told Bloomberg the container crunch already poses the risk of supply snags. A year after we had toilet paper shortages on COVID, we might be facing toilet paper shortages again on the Suez Canal blockage. Time to stock up, guys. Go ahead, pull your money out of the stock market, invest in toilet paper futures right now. About 10% of global trade passes through the canal, or nearly $10 billion worth of goods daily. That's a lot. Now, here's a profile of the ship, the Ever Given. It was heading for Rotterdam in the Netherlands. I love this website, Marine Traffic. I just found it. Status, stopped. Speed, 0 knots. Current port, literally the entire Suez Canal. The ship, I was wondering about the size of it because it did get kind of stuck in the canal, and the ship is 399.94 meters in length. Cargo ships, if you don't know, they're classified on their size, and because the Panama Canal and the Suez Canal are such integral parts of shipping, big ships are classified as being Suezmax or Panamax, meaning the largest allowable size to pass through these canals. This one, the Ever Given, is a Suezmax, coming in at 399.9 meters. Wouldn't you know, the maximum size allowed to pass through the Suez Canal is 400 meters. So we're coming in 6 centimeters short. short. Also, the current draft was only 15.7 meters, so it was only dipping 15.7 meters under the surface of the water. The maximum draft allowed in the Suez Canal is 20 meters, so this really wasn't much of an issue. If you haven't been following the story, the reason the ship even ran aground was that there was strong wind, and it ended up pushing the ship sideways. Wind is causing this. Danny Berger, one of the Bloomberg reporters on Twitter, she uploaded a really interesting picture. So this is the Suez Canal, the Red Sea, and all of these little blue arrows indicate ships. So this is a normal day. Now, right now, this is what it looks like with all of the ships just waiting to get through. This is, to me, hilarious. About a month ago on Reddit, there was a guy that wrote a really extensive DD about how he was going to short the entire South African economy for various reasons. Now, somebody just pointed this out on Wall Street Bets. The Suez Canal is currently blocked by a shipwreck. The last time it was blocked was in 1967. Ships heading to Europe from Asia had to go around South Africa, adding 12,000 miles onto their journey. Some of them had to stop at the biggest port in Africa, which was in South Africa, and a lot of companies offloaded goods at a discount in South Africa. This drove up the GDP in South Africa in 1967. That seemed like a claim that I had to investigate, and this is the GDP growth. And you could see South Africa 1966, 4.4, 67, 7.2, and then 68, 4.1. So you can actually see this little spike here during this original Suez Canal crisis. Now, what happened at this time? From 1967 to about 1975, we had the Arab-Israeli wars. The Suez Canal was basically blocked and mined, so nobody could get through it. South Africa did benefit at this time. Here's the original Reddit post. If you want to go back, it's posted in Wall Street Bets. I'm going to short the whole country of South Africa. You can read this guy's entire post. It's pretty funny. It was really well thought out. What he was doing was effectively just currency arbitrage, but I find it kind of amusing that he spent, by his claims, weeks, months researching this opportunity. Here, he's about to get undone by strong wind. It's going to blow up his entire investment thesis. And this is like one of those things where when you're an investor, you just see this happen and you just want to throw up your hands and give up. You're like, what? How am I supposed to account for the wind? Feel bad for this guy, but good for South Africa, bad for Suez. I don't know. It just depends on how long this thing goes on. Now, I was trying to think of how to economically play the Suez Canal blockage. And, you know, we were reading the thing about toilet paper, and I was thinking, oh, maybe like I short a big company that's a producer of toilet paper. The largest toilet paper producer in America, I think it's the largest or the second largest, is Kimberly-Clark. I was taking a look at the Kimberly-Clark stock price, and it's already pretty down. It's not like it's all-time highs or anything like that, but it has been rising throughout the week. But then I decided to like really investigate where Kimberly-Clark sources their wood pulp. And I found out that most of Kimberly-Clark's wood pulp comes from the United States and Canada. So shipping through the Suez Canal wouldn't even be affected by this. I don't even know why I'm showing you guys this, but I think I'm just kind of letting you know that not all the times when you do research does it matter. I couldn't figure out a way really to play the Suez Canal thing, and my toilet paper short idea fell through. I'm glad though that I researched where Kimberly-Clark sources their wood pulp before I went ahead and shorted the company. Next up, we had KBNT report their fourth quarter and full year results. This is a company that I did make a DD video on. Some of their operational highlights: they had Tron TV, 85 million viewers as the platform's first premier programmatic partner. I covered a lot of this in my video, but this one was really impressive. This was new to the earnings report here. Publisher inventory that KBNT can monetize or ad impression opportunities for their audience cloud, their open marketplace for advertisers and publishers to reach, monetize, and connect their audience, increased 874% from quarter 3 to quarter 4. This increase was driven by a combination of new partnerships, seasonality, and an overall increase in web activity due to COVID-19. I really wish they would describe to us exactly how much of this came from from new partnerships and how many partners this is spread across. Because if it's just like one or two big partners, then this percentage isn't as exciting. But if this is multiple new partners coming in and publishing on the platform, this is amazing. Either way, 874% growth on content available on their platform is an incredible opportunity. This is going to attract a ton of customers from the other side, knowing there's that much published content available. One of the words that they mention in here, seasonality, this is like kind of business speak. With one word, they're telling people don't expect these kinds of gains in the future. So you'll see this a lot on end of year earnings reports where companies have the holidays involved in their earnings reports. They just call it seasonality because it's a time of big spending. It's a time of big shopping. Their financials were pretty damn good. They had net revenues increased to 1.1 million compared to 280 in the prior quarter and $16,000 in the equivalent quarter of 2019. So they're up to 1.1 million. This is staggering growth. Their loss per share was less negative. This is another improvement. Net revenues increased to 2.9 million from 178,000 in 2019. Overall, I was actually really happy about the KBNT report. I just wish they would have given us more specifics on the number of publishers that were using the platform, but hopefully we get that in the future. Now, my options play last week. Whew, that was a close one, wasn't it? KB Homes, they ended up releasing their earnings report. This is from Thursday. KB Home, their first quarter earnings jumped 62% to $1.02 per share compared to 63% reported. Beat the expectations of 92, so they beat it by 10 cents. Revenues of 1.14 billion missed the street's estimates of 1.21 billion, but they still were up 6%. Homes delivered increased 4% year over year. Highest first quarter level of net orders in 13 years. Net order value came in up 35%. Gross margin surged 24%. Everything in this report was absolutely amazing, but just because the revenues missed by $0.07 billion, there was a drop off of 3% of the stock price. When I was looking at my option play for this, I saw that drop and I was like, wait, what? Why is this dropping? Then I just waited until Friday. It ended up coming out in the profit. I'm up something like 40% right now on the option. I'll probably close it out on Monday morning. I slept in on Friday, so I couldn't close it out on time. Here we go, another options win for Walrus. Here's KB Home, big drop here, and they opened up on Thursday at like $40, but then they ended up closing at almost 47 on Friday. So we had this big $7 gain. So the options play is definitely in the positive. James, one of my other viewers, said that he was up something like 40% as well. I can't remember, I have to go look at the tweet. Let's take a look at the upcoming earnings for next week. On Monday, we have a couple of interesting companies. I want to take a really close look at ABCL. Also, we've got Canoe coming up, Go EV, which is the only EV company I'm invested in. On Tuesday after close, we got BlackBerry coming in. There's going to be a lot of attention on that one. Chewy, I'm sure there's a lot of attention there. Lululemon for your Becky ETF. Wednesday, Micron. I'm interested in looking at Micron here. Express Spa, what a joke of a company. And then on Thursday, I'll probably be paying attention to CarMax, because I'm just invested in Shift and CarMax is one of the competitors for Shift. So actually I would expect CarMax, if they report good earnings, to boost Shift up at the end of the week. I'm not really so much interested in CarMax numbers. I'm interested to see how correlated CarMax's movement and Shift's movement are. Let's get into Webull. We've been kind of covering one consumer staple each week and just showing you how they behave in unstable market conditions. Really, since the beginning of March, we've been having these huge market hits, these red days, and McCormick, which makes seasonings for foods and some dry packaged foods, they've been going up this entire time. So you can really see how people just kind of rotate into these consumer staple stocks in times of market uncertainty. Anyway, their financials are really positive. Their last couple earnings reports, we've got revenue growth. It's great. It's consistent. 7.6, 7.6, 4.9. Their net income, we had 32.7, 8.6, and negative 5.7. I mean, it sucks to see a negative, but there's a lot of reasons for that. Plus, with a 32% quarter, that gives you a lot of leeway going into the future. Obviously, I'm expecting another decent earnings report for McCormick. It still has a lot of room to climb up to its all-time highs, so there's no reason to suspect that it would drop off after an earnings report. MACD's trending positive. RSI is just now entering overbought territory. Next up, we have Micron Tech. This is a semiconductor company. They've just had this incredible rise. Beginning of November, we were down at $50 a share. Right now, we're we're sitting at almost $88 a share, peak around 96 just a couple weeks back. For their financials, they're pretty dang good. Their revenue, they're reporting, this is a 16%, 24%, 15%, 7% gain. Even their net income is, we were negative down here at the start of COVID, 69.6, 56% net income. This is starting to look like a really financially healthy company. So I would expect this earnings report to be really high. Plus, with the semiconductor shortage that we've been having, I'm sure their sales are as high as they could possibly go. And probably their sales are going to be involving some sort of backlog where they're beyond production capacity. They're going to be reporting backlog contracted sales on their earnings report. The last company I want to look at today is ABCL Biologics. ABCL Biologics is a company that IPO'd last December, and I really wanted to invest in this company. I think it's a really cool biotech company. They offer a drug discovery platform that's AI powered. Pharmaceutical companies can use their platform to help identify antibodies for the treatment of diseases. And they're partnered with some really big name companies. I was so excited about this company until I saw their financials, and then I just didn't even want to touch them at IPO. This is going to be my options play for the week. I'm feeling a little bold after my Nike play, after my KB home play. I'm going to see if I can hit 3 in a row. The other ones were calls. This one is going to be a put. I'm going to be buying puts this week on ABCL Biologics, even though I love the company. We can see their revenue here was $3 million. This company currently down here at $24 has a market cap of $6.56 billion. When this earnings was reported, they would have had double that market cap. So they would have been sitting around $13 billion. So a $13 billion market cap company reporting revenue of $3 million. This gives them a PE ratio of 1,375. For comparison, Tesla, even after the precipitous drop it's had, is still selling at a PE ratio of 916. Yikes. Now, to be fair, the analyst projections are projecting really high growth in the stock value, 52, 55, 59. 5 analysts are all saying a buy. So I am clearly going against the grain here. I think the earnings report is going to be terrible. I don't think there's any way that an earnings report can justify this market cap as it currently stands. Now, to be clear, I like the company. I want to invest in this company, but I think that I'm going to wait until the stock price falls to like $12 to invest, because I don't see any way that the company should be valued what it is right now. I mean, this PE ratio is so far beyond future looking. It's in like fantasy land. 1,375. Come on. There's no reason for that. I'm expecting it to drop after earnings. I'm expecting more and more people to see exactly what this company has going for it. Who knows? Maybe I'm totally wrong. The analysts are projecting a huge gain. I'm just a guy on the internet, but I am going to take a chance here, and I'm going to buy puts on ABCL that are going to be expiring in a little over 2 weeks. There you have it. That wraps up your news and earnings for this week. I hope you guys did enjoy the video. One point to note regarding my DD video this week, I'm going to be changing things up a little bit, and I am not going to be doing one DD video. Instead, I'm going to be releasing an entire series of videos this week. I've had a lot of people requesting that I cover SPACs. I'm going to tell you guys about my 5 favorite SPACs. I am currently holding 5 SPACs. I haven't really covered my portfolio lately for you guys, but I am going to talk about all 5 of these SPACs. They are going to be much shorter videos than my normal DDs. My goal is to make each of these videos around 7 minutes long, maybe 8 minutes. Just give you an introduction to the SPAC and tell you guys why I invested in them. If you want to support the channel and you're new to investing, please check out my Webull referral link. It is below the video. If you sign up for a new account with Webull, fund it with $100, you get a free stock, I get a free stock, everybody wins. Because I'm partnered with Webull, the free stock that I'm getting is going to be valued at over $30. If you enjoyed this video, please like the video, subscribe to the channel, please hit that notification bell to be alerted to all my content as soon as it goes live. All right, everybody, thanks a lot.